Hey traders, Raghee here, and in this recap video we are going to go over the NQ. And one of the questions I get a lot of when people take a look at the spreadsheet at the website is that, here we go. So actually, by the way, if you've never seen the members dashboard, here it is, our chat schedule, and then the different access you get as a silver or gold member. Gold members, of course, get the archive and the chat room. Silver members get everything else but one of the things all members get are the trades, and this is the spreadsheet that I'm talking about. And most of you will notice the spreadsheet trades where we have setups for both the futures and the Forex markets, usually generally longer term time frames. So you'll notice we have the Forex and the futures, and they're generally longer term time frames, dailies, 240s, 480s, dailies. And the thing to remember about that is what I try to emphasize on the spreadsheet for both silver and gold members are the longer term trades that have validity for the next 4, 6, 10, 12, maybe 24 hours. So that if you only check into the site once or twice a day and check out the spreadsheet, there's a very, very good chance that the trades are still valid, that setups have not triggered, and you'll have some time to actually enter the trade. But there are instances like today where I've got a longer term bias on the NAS. So the recap video, we're going to cover the NASDAQ here, where I do have a lot of interest in getting long the NASDAQ if it pulls back to this area. In fact, this is the setup that I'm watching right now. We built this out in the chat room. So this is what I've got parked and waiting, but I had a bias up here, a bearish bias, because of this resistance from the upper level of the box. So I expected the market to likely fatigue and or maybe sell off. So the 5-minute time frame trade that we had talked about in the chat room, it even extended out to the 15-minute time frame, those shorter intraday time frame building blocks. The cool thing is I already had a high expectation that, we could sell off, but let's wait for the opportunity to trigger, whether that be a box breakdown after a long period of in kind of a longer sideways range. So you could play the momentum here, or you could play the short here, or you could play the breakdown through the wave right there. Either way, that's where all the action was happening. And then you take the short. Well, a 5-minute time frame is going to be very sensitive to this kind of intraday V, even if you want to call it a U. I think it kind of looks more like a V, but whatever it is, it's a reversal, right? And the cool thing about 5-minute time frames are they're going to be nimble. So the same traders who thought, okay, great, either wave breakdown, support breakdown, sell the resistance, when the blue grab candle right there plotted, that's the first warning. Sentiment is going neutral. It's no longer as bearish. And then we popped up through the Darvis resistance, the 34 EMA on the high. That's the 34 EMA on the high there. When we popped up through that, the buy triggered. And if you wanted to, in the latter half of the day, take that buy, that's where it triggered. Or at very least, that's where you got stopped out. And that's the nimble nature of the things that we can cover in the chat room. And look, once you understand the kind of setups that I teach, you can do this on your own. The color-coded candles are going to be the same color coding for everybody. The Darvis that I use here, it's a modified Darvis. It's a modern-day Darvis, really. On the NQ, on TradeStation, these are all levels that if you're running the same tools as I am, you're going to see the charts in the exact same way that I do. So all the levels are objective. There's not any level where, oh, well, Rog, I don't have the ability to draw the trend line the way you did. I don't use trend lines. Oh, Rog, I didn't, draw the retracement, or I didn't see the level that you saw. Notice every one of these were previous levels automatically identified by the study that I'm using. This 70-year-old tool that we've automated here, which, by the way, I give free to members, or I show you how to set up on your charts. These are objective levels. My grab candles, my wave, I give those away free as well, because if you have the indicator and you don't know how to use it, well, you only have, it's like a car with no steering wheel. So one of the things that I want to emphasize is these are objective tools, which, oh, by the way, happen to be free. But there are ways that you can say, look, I'm seeing the charts the same way a 30-year veteran is. And that gives you a tremendous advantage. But what I really want to emphasize here is how the nimble 5-minute time frame allowed you to adjust to, one, keeping a bearish bias, and then when the market reversed, kept you from being short for too long, and even better and aggressively, if you got opportunistically long, that was just 2 great trades in one session. So for day traders, this was a lot of fun for a lot of you. And that's how we handled it in the chat, and that's the tools that we use. Really more appropriately, is the tools that you can use on your own. And you can find these trades and replicate this without even the guidance once you have the training to do so. So that's a win-win. See you in the next update.